What if the greatest story in financial history, the asset that turned $1,000 into $1 million, the thing that was supposed to be digital gold, the hedge against every broken system, down with the system, man? What if it's just trading like a meme? Not a store of value, not a macro hedge, not correlated to gold, not correlated to stocks, not correlated to inflation, not correlated to software, really anything rational. Just a 4-year cycle meme that runs on vibes, ignores reality, and right now, during one of the most explosive risk-on periods in market history, Bitcoin's just kind of sitting there doing really nothing except kind of going down and being lame. In fact, doing nothing will be fine. It's doing worse than nothing. It just keeps bleeding out. The 4-year cycle bear market meme, the market's making it into a reality. Look, I hold Bitcoin. I hold a lot of Bitcoin. It makes up about 50% of my portfolio. It's still well in profit, so it's not like I'm suffering here. And this isn't a hit piece. Okay, this is me sitting down and being brutally honest about an asset that I'm deeply invested in because the math is getting a little bit uncomfortable. And I think you need to hear it. Let's start with the most painful truth first. The fundamentals for Bitcoin have literally never been better. Oh, I know quantum computing's going to take out everything, Lark. Haven't you seen the news? Yeah, you know what? That's pretty much overblown in my opinion. You have right now a situation where Bitcoin is being accepted at the highest levels. You have the US government actively pushing pro-crypto legislation. You have Bitcoin ETFs that billions and billions of dollars have flown into. You have major banks and brokers giving retail and institutional clients direct access to BTC. You have public companies with treasury strategies built entirely around Bitcoin. The Clarity Act is hopefully weeks away from passing, a major piece of crypto legislation that could change the game for everything. It could be the one spark that finally reignites crypto. The regulatory headwinds that killed the last cycle are gone. The Gensler regime is over. We have a very pro-crypto SEC, pro-crypto CFTC, a pro-crypto Fed. Literally, it's never been better. In the entire history of this asset, it's never been easier to buy Bitcoin, and it's never been more accepted as a serious investment. And yet, stocks are on a generational run. The Nasdaq's ripping. Tech is melting faces with unreal gains. Bitcoin. Since the most oversold lows of February this year, a moment that looked like a screaming buy, Bitcoin's up like 10 to 15% depending on when you're watching this video. And here's what's crazy. If you had sold your Bitcoin at those exact lows, the worst possible time imaginable to sell, and just bought the NASDAQ, you would be up 34% versus about 15% with Bitcoin. And individual stocks like Micron are up over 1,000% since that time. Many of their stocks are up 200 to 300% since that time. Just sit with that for a second. Selling Bitcoin at the most panic-stricken, oversold moment in 18 months and buying stocks was still, mathematically and financially for you, the right trade to do. Fuck, that sucks. Sitting over here believing in Bitcoin and then you just get your ass kicked by stocks all day long. And sadly, the beatings will continue until morale improves. But here's where it gets pretty interesting and perhaps a little more uncomfortable. When you run the actual math on what Bitcoin needs to deliver just to justify the risk of holding it, the numbers tell a story that the crypto community simply doesn't want to talk about. And you need to listen to this video. You need to watch it the whole way through and share it with your friends, okay? By the way, subscribe if you haven't subscribed yet. So before the math, let's call this cycle what it was. This was supposed to be the big one, the big daddy of cycles, post-halving, institutional adoption, ETF flows, regulatory clarity, every tailwind lined up possible, Trump shilling crypto. The community consensus was a $250,000 Bitcoin, which lines up, of course, with the 3.618 Fibonacci line, not even a wild, unreasonable target. Some people were calling for 500,000 because of all the things that were happening, all the big tailwinds. Michael Saylor had charts going to the moon. We got $126,000. Not terrible if you'd bought perfectly at $15,000 after selling perfectly at $69,000. But that 126 was roughly half of the conservative target for where Bitcoin should have ended up with all the tailwinds that it had. So what happened, man? Then we had a slow, grinding, demoralizing fade. Well, everything else in the world went vertical. Gold exploded, silver exploded. Stocks went on the most generational run that's happened in decades. This was the weakest cycle yet for Bitcoin. Certainly relative to expectations, relative to fundamentals, most brutally, relative to the opportunity cost of capital locked inside of it. And the explanation you keep hearing? Well, the 4-year cycle just needs to play out. Just wait, it's coming. Diamond hand it, baby, let's go. The narrative is wearing thin for a lot of investors. Investors in crypto are tired of getting their asses kicked all the time. Real money's quietly rotating out of crypto and into equities. No, it's not a good time to do that, but you could have said that for the last 18 months and it would have been a bad time in terms of the charts for crypto. And you still would have made shit tons of money in stock, even selling at a bad time for crypto. And this money's not leaving in panic. It's moving slowly and rationally out of crypto as people are just slowly fucking giving up on the dream. Because the scoreboard is damn hard to ignore. Crypto investors are tired of losing. Bitcoin was supposed to be the asymmetric bet, the inflation hedge, the macro hedge, the unique asset. the thing that makes everything else look boring. And right now, it is the boring thing. The S&P 500 is the asymmetric bet right now, as crazy as that is to say. It's a bizarre sentence to speak in 2026, but here we are. But at least Bitcoin is still volatile and a very highly tradable asset, which is why I need a killer exchange account like BitUnix. BitUnix, of course, is able to anyone, anywhere in the world. No barriers. You can trade crypto. You can trade stocks. You can take advantage of all those things with crypto rails. Deposit USDT, trade the coins, trade the stocks, trade the metals, all in one place. Sign up now through the link below, and you're immediately eligible for $1,000 daily giveaways that we're doing here Monday to Friday on the channel just for being a member. Start your account, make a deposit, make a trade, you're in to win. And if you want a real edge, join the Inner Circle. This is our private investor community because Inner Circle members now also get an exclusive $80 a month rebate from BitUnix plus exclusive $5,000 Discord-only weekly giveaways. But you have to be BitUnix member to get those deals. Link down below, sign up. Thank you very much. Let's talk numbers, because this is where the real decision gets made anyway. Bitcoin's annualized volatility over the last decade has averaged around 50 to 70%. During peak cycles, it's spiked above 100%. Even recently, as liquidity has increased and the asset has matured, it's still sitting around 40 to 50%. The NASDAQ, the QQQ, runs at roughly 18 to 22% annualized volatility, peaking around 30 to 35% during major crashes like 2020 or 2022. What that means in plain English, Bitcoin's day-to-day and week-to-week price swings are 2.5 to 3.5 times more intense than the NASDAQ's on average over a decade. So the question becomes very simple. What return does Bitcoin need to generate to justify that level of volatility and pain? The answer, for me, at a minimum, is a 30% compound annual growth rate, which, by the way, happens to be Michael Saylor's predicted annual compound growth rate for Bitcoin. You see, because anything less than that, and you're taking on dramatically more risk and volatility and sleepless nights and pain and all the other bullshit for returns that don't compensate you adequately. The NASDAQ, by comparison, has delivered roughly 15.8% compound annual growth rate over the last 20 years. If we look at the last 5 years, the rate's actually like 20% plus. If Bitcoin hits a 20% compound annual growth rate going forward, which would be considered an aggressive return for any other asset class, by the way, but in that situation, you're only outperforming the NASDAQ by what, 4% per year? 4% for 3 times the volatility. For the stress, the 40% drawdowns. Is Saylor gonna sell? Is Quantum gonna take out Bitcoin? Is Satoshi gonna come back and dump 1 million coins? Blah, 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 blah. That doesn't feel like an asymmetric bet anymore. That feels like a trade that may drive you crazy. And here's where it gets genuinely interesting. Because the spread between the bull case and the bear case for Bitcoin is unlike anything else in investing, depending on which compound annual growth rate you believe in, which CAGR you think we're going to have moving forward. You're looking at wildly different futures. I'll break down exactly what each scenario means for your money. We're going to do it now. So let's run the numbers out to 2040. It's 14 years from now. It's a long-term asset, right? Bitcoin, we're not trying to get rich overnight. We're investing long-term. Bitcoin, at the time of recording the video today, was around $70,000. Scenario 1, 10% CAGR. This is the gold scenario. Gold's got a 10% CAGR. So Bitcoin matures into some kind of a store of value asset with slow, steady appreciation. By 2040, you are looking at roughly a $265,000 per coin Bitcoin. That's great. It's a 3.8x over 14 years. It sounds okay until you remember that the NASDAQ has historically done dramatically better than that, by 50 to 60% better with a fraction of the volatility. Now, if this is where Bitcoin ends up, the risk-reward case collapses entirely for Bitcoin. You can still believe in Bitcoin, you can still own some Bitcoin, but having it as a majority of your portfolio sounds like crazy talk in that situation. Scenario number 2, a 20% CAGR. This is the respectable, uninspiring scenario where, for me, it would probably still make sense to check out. To be honest, by 2040, Bitcoin hits roughly $900,000 per coin. It's fantastic, almost $1 million. A 12.8x return on today's prices. It's genuinely good, except you're still only marginally outperforming what aggressive equity investors have historically achieved, just by holding the fucking NASDAQ. And you're doing it with far more pain along the way. Scenario 3. This is where things get interesting. This is the 30% CAGR scenario. This is the Saylor scenario, hyper-monetization, global reserve asset, institutional treasury standard. By 2040, Bitcoin reaches $2.75 million per coin, a 39x return. Now we're talking about something that genuinely justifies the ride. The market cap starts getting absolutely ridiculous at these levels. By the way, $1 million is already ridiculous. That's more than gold, but okay. It would justify the ride. But there's a fourth scenario I'll throw in here, the dream case, a 55% CAGR. That's what Bitcoin has historically done. That gets Bitcoin to $1 million by 2032, 6 years from now. That's the number that makes every drawdown feel worth it. That's the asymmetric return that the original Bitcoin pitch was built on. But the math decays because a 55% CAGR until 2040 is a $32 million Bitcoin, which I don't think any sane person is talking about out there. In fact, it's absolutely fucking ridiculous. It's a market cap of $600 trillion plus, which is more than all global wealth combined. It's not fucking happening. The question you have to answer for yourself is which of these four scenarios do you actually believe is coming? We're likely going to be either the 20 or the 30%. Here's the thing though, and this is important. The most hated assets are often the best buys. Right now, as you probably understand and feel in your bones, crypto sentiment is at multi-year lows. Retail investors are fucking exhausted, man. Capital is rotating to stocks. Not having done that, if you didn't rotate your capital in stocks in the last 18 months, you're looking at it going, why the fuck didn't I rotate my capital in stocks over the last 18 months? The narrative has shifted from crypto as the future to crypto's dead again. Well, maybe crypto's not dead, but crypto's underperforming and may not be worth such a big allocation. Search interest is declining, podcasts are quieter, the group chats have moved on. And look, that all is historically, almost without exception, when you want to be buying, not selling. But to understand what you're buying in that situation, are you buying based on the premise of a 10, 20, or 30% CAGR moving forward? Because how you see things will influence where your gains could potentially end up in 5, 10, 15 years. Bitcoin also, of course, has genuine structural tailwinds that have never existed before. The Clarity Act, when it passes, I hope it's not an if it passes situation, that they're not trying to run the clock down until the midterms, because then the Democrats are never going to pass this shit. But when the Clarity Act passes, it unlocks $40 trillion in institutional capital. And obviously not $40 trillion is going to flow into crypto, but even a couple percentage points of that make a huge impact. ETF inflows are creating genuine sustained demand for BTC. And although they sell sometimes in a weak market, that's a real problem. The fact is that we've had a lot more come in than go out. Corporate treasury adoption is accelerating, particularly through Strategy, but other companies too, like Strive, are now hopping on board that train. If you believe the 30% CAGR case, and there are serious credentialed people who do, and there's a good case to be made for a 30% CAGR between here and at least $1 million Bitcoin. Beyond that, who knows? But then Bitcoin at current prices in 2026 is one of the most attractive entry points in years. The fundamentals say buy. The sentiment says buy. The price action says pain, especially compared to equities. The tension is exactly where generational opportunities hide. And here's where I land personally. I'm holding Bitcoin. Bitcoin's still around 50% of my portfolio, 50% of my net worth. But I'm actively investing outside of crypto and will continue to do so because the opportunity cost argument is extremely real. And I'm not going to pretend otherwise. My base case is the 30% CAGR scenario, that we get to $1 million Bitcoin sometime in the mid-30s. And that's what keeps me on. I think the Clarity Act is a genuine catalyst. I think that institutional adoption is still really in the first or second inning, and we're going to see so much more of that coming in the next years, and that's how you get to $1 million Bitcoin and a 30% CAGR over the next 5 to 10 years. And unfortunately, the 4-year cycle, while frustrating, for some fucking reason is not broken. At a time when markets could not be more risk on, Bitcoin somehow found a way just to meme itself into a fucking bear market. There you go. The stupid meme, but we all believe it, so therefore that's what happens. But I'm holding the view here, of course, with open hands. If the CAGR compresses toward 20% over the next few years, I will actually start reducing my exposure to Bitcoin before we get to the $500K to $1 million mark, which is where I'd want to exit this multi-year trade anyway. And I'll rotate even more aggressively then into equities. The math will tell me when to change my mind. Right now, the base case is 30% CAGR. If we fall below that for a couple years straight, things start to get very unfavorable in terms of mathematics for Bitcoin. What I won't do, though, is sit here and pretend the last 18 months haven't happened. Bitcoin underperformed in a massive way. The cycle disappointed basically everybody. Now, if you were hyper-gambling meme coins, which is mostly scammers and insiders making money, to be honest, a few people made money on it, but the most people who did were insiders. The opportunity cost was real. Yes, Bitcoin did well if you bought at 15K and sold at 126K. Great. If you're holding multi-cycle, you're probably thinking, shit, why didn't I just put more money into stocks? And the question isn't whether this is true. It's clearly true. The question is whether you believe the next 10 years look different. I do. I believe it just enough to keep holding. But where do you land? Drop it down below in the comments. I read them, we check them. Let me know what you think. Are you a 30% CAGR kind of guy? Or do you think that Bitcoin has hit a moment where it's going to continue to underperform for years to come? And if so, what are you doing as a reaction to that? Thanks for watching.